Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. So the majority of the stocks that we have running right now are in the healthcare sector. Many of them are biotech stocks. It's been on fire. A lot of these penny stocks that had gone nowhere for a while just took off, and they just continued to run as the markets were pulling back. They've been breaking out. So it's been it's been a really good couple weeks for biotech here and for the healthcare sector. First up, let's look at ZSAN, ticker symbol ZSAN. Okay, so this was alerted the last couple of days. We've been following this, and it had nice follow through again today. It had closed yesterday above the gold line, which is the 100-day simple moving average at 10.99, that 11 level. And then today, what needed to happen was a break above this 200-day simple moving average at 16.89, and it did break above that level. It ran up to that next resistance level, which was the 300-day simple moving average at 22.09. And you could see that upper wick. People took profits from that level. That is the lock and gain zone. We always look to lock and gains at the 300-day simple moving average. You can always reload if the share price breaks out higher. More times than not, you will be glad that you loaded or unloaded at that level. And as you can see with the 1843 close, people that were in our chat today that got the alert between 25 and 23 that was the lock and gain zone. Congrats to you. Thanks for being in the chat today. Good job. Way to trade. Okay, so let's look at the ZSAN weekly chart. You can see here it has this really long downtrend, and then it's been on a 4-week rally. Last week, that close above EMA's 4 and 8 signaled upside potential. It was a bullish change in trend. Each candle on this chart represents 1 week of trading, and so you can see this week it's broken out above that middle Bollinger Band at 1067. If it can hold that level, a new uptrend could begin, similar to back here in December when it closed above. And then if you look over on the left of the chart, and then it got a nice uptrend going. So that's what you're looking for now. Another reason why we were saying to lock in gains at that 300-day simple moving average on the daily chart, because on the weekly chart it was hitting key resistance levels at the same share price. It's hitting the 150-week moving averages. When the share price was above that 100-week moving average at 2271, I did put alerts out in our premium chat alerting everybody that it was hitting that level to lock in gains. And as you can see, it pulled back, and so that was that's the good call. That's above that upper Bollinger Band. Now if it breaks back above, then you could jump back in. If it fails to get above that 50-week moving average at 1921, it's likely to pull back. And as you can see, the middle Bollinger Band is way down here at 11. So right now what you're looking for if you're a bull is for a new uptrend to begin, and then a break above that. We're calling it the 23 resistance zone. If you see ZSAN trading 23 or higher, that's going to be your signal. Okay, yeah, it's ready to break out, it's ready to keep going. If it struggles with even getting above 1850 or 19, that's where you could see some consolidation. If you look here on the 15-minute chart, you can see where I put out the alerts in the chat was right here. As it was peaking, it was coming up, it was giving alerts. It's hitting the key levels on the charts. We did put out alerts before that this red candle was forming right here at 2 o'clock, and it did push higher and made that last final push, and then it pulled back. And then you can see in the close, it closed below the middle Bollinger Band. So the next key support level is the 50 simple moving average at 1633, closing below the middle Bollinger Band after being on a multi-day run on the daily chart. This was your, if you didn't lock in gains here, this was your signal to break below that middle Bollinger Band to lock them in, since it's already on a multi-day run. When a stock's on a big run like this, you're looking for any clue to if you're a trader, to lock in gains, and so today was the day. Okay, so yeah, let's look at NETE. Net element here closed up 71%. So yeah, so I just want to say, this was a nice follow through. It did not look pretty earlier in the day. The black candle was forming. It was trading below the open. The open is down here, and you could see the lower wick came all the way down to the 300-day simple moving average. It dropped back below the green line, which was the 50-day simple moving average at 826, and it was looking really ugly at the start, and it did not look good because there's a gap between high of day yesterday, the top of this candle, and low of day today. But it ended up reversing, and I'll show you on the next chart, it held a key support level on the intraday charts, bounced, and it ended up running all the way up to near high of day. So this was an incredible move. Yeah. So congrats to Mondo and our chat. Way to trade, buddy. You rocked it out. Good job. Very happy to see that it got back above that 50-day simple moving average. Now, as long as that level holds at 826, that's going to signal more upside potential. If that level, fails to hold, that's going to be your clue, that it could pull back, and then you have to be concerned about this gap down here. But right now, this is a nice move, and yeah, we're going to see if it can continue pushing higher. It does have a really big volume spike today. The one red flag is that if you look at the previous volume bars, they're very, very light. So you have to be on the lookout for volume drying up. If you look here at the NETE 15-minute chart, you can see the black candle that I was talking about. And so when we see this candle form during the day, it's a signal to lock in gains, and that was still the right signal to lock in gains here. And it retraced all the way back, and it had one line of defense that we were looking for to hold, and that was right here. And I did post an alert in the chat with the silver lining. This was the silver lining. I know I was talking trash about the black candle and that you didn't want to load here, because it's usually, many times it does not work out well when that happens. They end up fading the rally, and the next day it's down. But if it holds that middle Bollinger Band right here on the 15-minute chart, which it did, that's your signal to reload. So if you unloaded here on the gap up, this was the reload zone, and it did pay off. It held that as long as the middle Bollinger Band holds, the signal is to keep riding. And then once it got above the high close, which was the close on the first candle, the bottom of this candle is the close, that was your signal that wanted to break out higher, and it really got moving. And then it did get above the open as well. The open is up here, and so that was another signal that wanted to keep pushing higher. So this was a really, really strong move. So congrats to everybody. Just keep following the charts. Okay, JAGX. Okay, yeah, this is another one that made an incredible move today, up 131%. I mean, we had been alerting this for multiple days. This is a stock we've been following for a long time. We had discussed this break above the middle Bollinger Band, and then the break above the 50-day simple moving average, and then we were back on the break above the 50 again, and then it topped out at the 100, and then we were keeping an eye on it all through this consolidation period here, saying every once in a while saying, oh yeah, it's back on the radar, we're going to see if it can break resistance. The whole time it was all about this gold line here, the 100-day simple moving average at 15. That's been the big resistance level to break, and as you can see, all these candles here are staying above the green line and the dotted purple line. They were holding the middle Bollinger Band in the 50-day simple moving average. They were staying above 14. That signaled that it was building a solid support level here. And then once it finally broke above that 100-day simple moving average today, that was a signal that was ready to go. Now, I do admit that I was surprised that it kept breaking resistance, because you track something for so long and it's doing nothing, and then you never know how high it's going to go. So that's why you have to keep following the charts. And if the intraday charts signal that the stock is still bullish, the signal is to keep riding. And so we didn't know if it was going to get above this 18 zone, and it did. And then the next one was this big level here in November, and then the level in October. And I did post a chart in the chat real time. I was tracking this. So if you guys want to learn how to chart things in real time, come into the chat. You have to send me a direct message though when I post a link below the video to get into the premium chat. And so what had to happen is a break above 24, and that did happen. And that put on the 200-day simple moving average as the next target, and it did run up to that level. That when it broke above the 200, the next big target was that 300-day simple moving average. It didn't hit that level. It started pulling back at 44. It hit resistance from over here, this cluster of candles. But the big thing now, it's all about this 200-day simple moving average. So going forward, if it can stay above, if it can get above 33, right, that signals keep riding. If you see that 32 is resistance tomorrow, it fails to break that level, that's going to signal downside risk. The risk is that it drops all the way down here to EMA 4 at 21. The upper Bollinger Band is way down here at 23, and then you have the support levels down here at 24. So it could get a haircut working back into the bands. Previous closes above the upper Bollinger Band, each one of these closes were above the upper Bollinger Band, and notice how they were followed by red candles working back into the bands. So our theory is if it pulls back from high of day like that and closes below the key level, it fails to stay above. Once it breaks above the 200-day simple moving average intraday, it has to stay above that level. And then my theory is if it pulls back below and it goes for a close below, that's your signal just locking gains. And so I think that's the safer way to play it, because it's telling you that level's resistance. Now it could bust ahead of that tomorrow and head higher, but it's up 131% in one day. The old saying is bulls and bears make money, but pigs get slaughtered. So, it pays to lock in gains. It keeps you in the game. And so if you look at JAGX on the weekly chart, this is another reason why it looked like, that was a good level to lock in gains, because notice 41 here is the same level as where it pulled back up here, 44. Okay, so that is the 50-week simple moving average. So it came all the way up to the 50-week simple moving average, which has been major resistance. Notice how every time it gets hit, all these candles are hitting it, it fails to break. So you look to sell at that zone. That's the sell zone. Until it closes above that level for the week, it will continue to be the sell zone. This is a multi-year pattern, multi-month pattern. So you can count on people selling at that level. So you follow the historic trend, and then you keep an eye out for a change in trend, right? So you're anticipating the history repeating, everybody's selling at the 50, but you're keeping an eye out for a bullish change in trend. So today the strategy was to lock in gains at that 50-week moving average, and then keep an eye out for a close above that 50-week moving average. And if it happens, then that signals to jump back on for a ride up to that 100-week moving average. Right now, this candle's pushing through that upper Bollinger Band, and once again, you have potential downside risk with the pullback to EMA4 at 22. Okay, so if you look at the 15-minute chart, it is holding up on the JAGX 15-minute chart. It had a really, look at the volume previous to this breakout. Such light volume. This is the way it's been going in the healthcare sector. And so what you want to do is you want to look for the volume. You look for a stock, that nobody's been talking about, and then it's all of a sudden has volume and it's breaking out above resistance. And so this break above all the moving averages in the 15-minute chart on a volume spike was your signal that's in play. And as long as this pink line holds, the signal's to keep riding. Notice how every single one of these candles is above the pink line until right here. Okay, and that was your clue. It's starting to break down, and then notice it broke down into the close. It did hold the middle Bollinger Band, so if it can stay above 31, that keeps it in play. It has to break the high close here that's right below 36. Above 36 signals it wants to head higher. Then you can see a retest of 44. A drop below 30 is going to be your big red flag, and notice the 50 simple moving average is way down here at 21. Everything's leading to a potential drop down to 21, 22 if that 30 support zone fails to hold. Okay, let's look at CRIS. Okay, keep an eye on this one. This is the perfect example. Okay, this is a stock that doesn't have much volume. It's been, it has this very long pullback, and then all of a sudden it heated up this week. It had a nice break above the middle Bollinger Band on Monday, and then it's been consolidating, turning the middle Bollinger Band at 54 into support, and then today the big move was the close above that 50-day simple moving average. You have to go off this chart to find the last close above that level. It was tested back here in October and it failed to break. So this is a very strong bullish change in trend. As long as it stays above 63, that signal is to keep riding. That signals that there's this new uptrend attack. Look at the giant volume behind the move. That signals that they could be pushing this higher tomorrow. And so what you want to keep an eye on is the 100-day simple moving average. If it hits that level and it fails to break, that's going to signal a temporary top. Now, if it can get above that 100-day simple moving average and turn it into support, that'll be your signal that it could head higher. Notice how it's lining up with key resistance levels. And so what you want to always be using are both the moving averages. That's what we use for resistance. And then we also use high close horizontal resistance. We find key levels of support or resistance, and you draw your horizontal line across, and and you can see that's lining up with 88. This is going to be a really crucial level to break. You can see today it came down, and it's right at the key high close from January. I'm always looking at the top of the white candle, trying to draw the trend line across the top of that candle for the high close of. You notice how that's the highest close of the entire month. It hit that level. It has to break above 75 is going to be a big resistance zone. Okay, let's look at OGEN. This is one from last night. That was a nice follow through. Okay, so even though they're diluting and dumping shares, and this is a thinly traded stock that just had some volume out of nowhere, they pushed it higher today, and that does happen. And so notice how this thing had zero volume. And then yesterday, boom, out of nowhere, big volume. And we're talking about big money because this had no volume. You know, it was down here trading near $1. And then all of a sudden they got it way up here near 420 and you're looking at 3 million shares. You know, they probably traded, you know, $10 million worth of stock yesterday. So if they were dumping into that rally, the company, which it looks like they were at that long upper wick, that was a nice day for them. And so look at the big spike down in accumulation distribution, you know, the spike down here on shaken money flow, you know, so that's just a big red flag. Today a doji formed, so you have multiple white candles with a doji after a gap up open that forms bearish doji star reversal pattern. So now you have a bearish reversal pattern that is formed. Just keep in mind that anytime you have an uptrend going and there's a gap up open, it's the gap that sets up the pattern. So notice the opens above the close from yesterday, and then either a hammer or a doji forms. A hammer and a doji formed to the top signals a possible pullback. Now if you see the inverse of that, a hammer, like down here's a hammer, at the bottom that signals a bounce. If you get a doji or hammer at the bottom, many times the bounce is coming. And it's all about that gap. You know, you want to have that gap down or that gap up, and that really sets up that bullish reversal pattern or bearish reversal pattern. In this case for OGEN, this is a bearish reversal pattern. This is signaling a possible pullback. It has to break the 200-day simple moving average at 331, the red line, and then get above the blue line, the 200-day simple moving average at 331. That's the red line. It needs to get above that. But then notice how once again, as I was mentioning earlier, the blue line, the 300-day simple moving average is the sell zone. Look how they sold here. The upper wicks. It was high of day both days. Both days, if you sold at $4 at the 300-day simple moving average, you were stoked. You sold at high of day. Okay, let's look at and you want to keep doing that until the trend changes and they let it close. How you will know that you want to keep riding is when they let it close above the 300-day simple moving average, and then it has to stay above the 300-day simple moving average becomes the stop loss level. Okay, let's look at ACRX. All right, so this is heating up as well. You know, closed above 50 on RSI. It's at 54. Bullish crossover here on ADX. So just keep an eye on this one. It's trying to heat up. You know, as you can see here, you know, we've got this sector running. Healthcare, anything with healthcare that's heating up, you want to keep an eye on it right now. They're in play. You know, at some point they're going to put the brakes on this little party, and it's not going to be happening anymore. So just keep that in mind. You know, these parties happen where they're running a whole sector like this, and then bam, they'll put the brakes on. And so don't get caught holding the bag. It's a game of hot potato. All right, these are a piece of, you know, a lot of these are not great companies. That's why they're penny stocks. They have bad financing. They're going to use the rallies to dump shares. Many of them, not all of them, but just keep that in mind. Okay, so you just you know, these are trading. You know, a penny stock like this is a trading vehicle. Okay, more than likely, as opposed to some of these could be investments, and this is just my opinion. But I'm just saying, just be careful, because at some point, you know, everybody's getting on to the fact that the healthcare sector is running, and everybody's jumping into it. You know, and yeah, the healthcare sector, and that's right when they flip the switch and they start shorting them. So just keep that in mind. But right now it's still party time. As long as they're still in play, the key is volume. So you've got some volume trying to pick up. And so for this one, it's all about 190. Okay, so that's a major resistance level. And then it's this 50-day simple moving average, the green line, and the gold line, the 100-day simple moving average. If you see it trading at $2 or above, that's going to be your signal. Yeah, this is ready to head higher. If you see it fail to get above that $2 resistance zone, if it's struggling with 190, then it's not even worth your time. Okay, let's look at GALT. Okay, so GALT here is up 12%. So this is one that was alerted yesterday. So congrats everybody that caught that. Yeah, it followed through after, you know, so it was the close yesterday above the 50-day simple moving average. That's why I posted alerts on it, is because it had closed here above the green line. And so, you know, it had been struggling with that. Like, you're not struggling, it had been trying to turn that into, you know, maintain its support. Notice how all these candles are riding that green line. So it's been creeping higher, holding that level. And then yesterday, you know, the volume did pick up a little bit. You know, there was a little bit of a volume spike. You know, it was the largest volume day in a few weeks. And then today there was a nice volume spike. You know, it was the largest volume since the first trading day of February. And so coming up, the big resistance level is over here. You know, you want to break above this January 17th closing price. $6 is the next target. If it hits $6 and it fails to break, then you're looking at a double top. You know, it hit the $6, pulled back off the 50, and it's going back up. and so it has to break above and turn 6 into support to head higher. If it finds resistance at 6, that's where you're going to know, okay, this is the top of this current run, and then it has to hold EMA 4 at 492. Once it drops below, that's your clue. Okay, yeah, this is cooling down. Okay, take a look at RTTR. Okay, yeah, this is, keep an eye on it. This one's trying to heat up. So this is one that isn't you know, considered bullish yet because it's still in a bearish downtrend. You know, candles are forming below the middle Bollinger Band. On this candle here, the middle Bollinger Band broke. It got above temporarily. The middle Bollinger Band is the dotted purple line. It's also the 20-day simple moving average. And so the candles have been below that level this whole time. It's been resistance for, you know, the whole month of February, and it's trying to get back above. It closed below that level again today with breaking temporarily, and so it has to close, you know, above 2883 signals it's in play. But you know, now you have the key resistance level. You can see here if you draw a descending resistance line across these candles, you can see it's perfectly lined up with this 50 and 100-day simple moving average resistance zone. So this is just the crucial level to break. You can see here 3 major resistance levels lined up, and so if it trades above 32, that's going to be your clue. Okay, yeah, this is ready to head higher. Above that 100-day simple moving average will be your big signal. Fail to get above those levels, and it'll signal the top as it has, you know, previously. So keep an eye on it for, you know, a 33 and above, and that signals RTTR is in play for a move higher. You know what makes it interesting is that it has this big volume down here. We always look at the volume as a signal that you know, that there could be more upside. And notice how they had the long lower wick followed by the big red volume bar. That was your signal that they loaded for the bounce. Now the bounce play could be finished with the share price hitting that middle Bollinger Band. We'll know if it's done or not, whether or not it can get up there above that 28 resistance zone. Okay, so take a look at EBIO. This has been on a really nice run, and so today the bullish development was the close above the red line. The red line on all my charts is always the 200-day simple moving average. I keep my moving averages and the chart's always the same, so it makes it easier to analyze. Every time that you you know, if you are a frequent viewer of my videos and you watch them, you will know that the red line is that 200-day simple moving average. For new chartists, I recommend doing that, keeping your moving averages all the same color, and that way it makes analyzing the charts much faster. If you look here, that close above that 200-day simple moving average is a really bullish move. It hadn't been above that level. I mean, you have to go off this chart, so you have to go way back to find when it's closed above. So this is a signal that this uptrend is intact. Now, as long as it stays above 115, it should keep pushing higher. Notice the top of this current channel is right here around 130, between 125 and 130, so that could be a temporary top that is also lining up with a key support level from down here in October. And so keep, you know, that could signal a temporary top. Notice that this is the ascending support line or resistance line, ascending support, and then ascending support, I'm sorry, and ascending resistance. And so it's setting up to hit the ascending resistance line. If it can bust above the 130 level, then that would put the 300-day simple moving average at 143 on deck. That is the inevitable target as long as it can stay above that 200-day simple moving average. Okay, let's look at PGNX. Okay, yeah, this is a very nice move today. This has been on a super strong uptrend. Notice how down in February it bottomed out down near $5, and then now it's just been really pushing. I wanted to show you this chart because it was busting out and hitting some key levels. As you can see, it broke out above the October high close, and so it also broke out above this June high. And so this has been, you know, this was a really crucial resistance level at 775. On a pullback, you want to see that level hold. Now it's hitting resistance from over here in May and April of 2017, and so 850 is a really big level. That was also a support level from back here in February, and so you know, it was a big support before it broke. And so when a level is a big support level, it turns into a big resistance level. Now, if you could see a breakout above the 850 and turn that level into support, that would be super bullish, and then we'd be talking about, you know, the uptrend continuing. With this candle pushing so hard above the upper Bollinger Band, you could see it pull back to test EMA 4. Now, during this entire strong push, EMA 4, the pink line at 756, has been holding. As long as it's holding, the signals to keep riding. Now it is on a what looks like a 5-day run with a huge volume spike today. Many times that does signal a possible climax spike. If you look here at the weekly chart, you can see here for the PGNX weekly chart, this is a similar time frame, you know, similar amount of days all right? But notice how the weekly chart smooths out the data. It makes it much easier to read, right? And so you can see here the high close in October and then the resistance in June and how it broke out above both those levels. You want to see it close above both those levels for the week, basically 750. A close above 750 for the week would be very bullish. It's hitting this 850 support zone that I talked about, right? So this was, you know, support and then support, break above, and then, you know, you're talking about retracing back up to that 1150 zone eventually. You know, that's where it's headed if it can keep this going. It had, look at all the white candles in a row. You know, now it's trading above all the moving averages on the weekly chart. Keep in mind, this week's candle is busting through that upper Bollinger Band. You just want to see that $7 level hold and the candle stay above EMA 4. And then finally, I'm going to leave you with COLL. Huge move today. I mean, this is a $29 stock and it closed up 23%. Notice that it broke out of this tight channel today on a volume spike. So notice it's been in this tight channel for the last few weeks. You know, it broke out of the top of it. This was a double top level. It had made a top tier on the 23rd of January and then again here in February. And then today, the move above that level, that's a signal that it finally wants to break out higher. So yeah, this is a big move. Look at the big volume spike behind the move. And so if we look at the weekly chart, you can see this is the entire trading of this stock. You know, it started trading back here in 2015. And then it ran up to this high, which was right here about 2750, and that's from December of 2015. And so this week it's breaking out above that level. This is the all-time high close on the weekly chart for the history of the stock. So that's what it's going for this week. So keep an eye on this one. I mean, this is another, you know, healthcare stock. This is an incredible move by this sector, and I think a lot of it's been unnoticed because a lot of these are the small caps. They're stocks that people aren't familiar with. And so they've been able to fly under the radar. And so now what it has to do is close above this 2750 level for the week. That would be very bullish. And then it break that 31 level all-time high. Then it would be a legit blue sky breakout. But yeah, this is going on blue sky breakout territory. Keep in mind that I use this to show how the jar has been filled. You know, so it's filled the jar all the way back to 2015 resistance. So it's going to have to break out to new levels to head higher. And so keep an eye on it. When the jar is filled, many times that'll signal a temporary resistance zone. As long as EMA 4 at 2625 is holding, the signal is to keep riding. Notice it's been riding for months. So yeah, very sweet move for COLL. And congrats to everybody trading the healthcare sector. I know the markets have been pretty wild right now with lots of big up and down swings, and this has been one place to find some nice daily percentage gains and really good for all those penny stock traders. So congrats everybody out there. Come join us in our chat. Everybody's super friendly and we like to share the knowledge. So yeah, send me a direct message or in the I'll say hi to you when you come into the chat, and we will get you in the premium. Okay, so I'll post the link below the video. Thank you.